Hello, trading is closed on March the 4th, 2021. We'll start with our disclaimer as we always do, then we'll go over the significant trading day in the market. It's my trading plan for tomorrow, March the 5th, 2021. I can be completely wrong. Trade at your own risk. Please follow my rules. And my email is mejt.trades@gmail.com. I'm still getting people asking me about the rules. You can find them here. Here are the instructions. Okay. Look for the pattern with the early low. This is it. Tomorrow has the early high. We said unless we gap down smartly, we should see 38.4909. That failed. So we now have our second failed target of the year, 3701.75 was the other one. And they should print it sometime. We just don't know when. We'll just review what we said. We did get breadth deterioration today in spades, and that confirms this down move is the real thing. In the afternoon, come back to the morning. In the afternoon, MEJT said this drop was false, the price would retrace, go over this high, and they did. The morning gave us a MEJT sell signal and an ultimate sell signal. Because the target was poorly defined, any trade under this low, which we got here, is the minimum and enough to satisfy the sell signal. However, almost always you get more, and when we undercut this low, we got more. We also had a very rare pattern I discuss in the book. It's called the AM+3 buy signal. When I came up with the rules in the early part of the century, it wasn't that rare a pattern, but I don't think I've seen it in years. It has a tendency to rally throughout the day and then give it all back soon thereafter. If you can't hold the gain through lunch, then you forget the pattern. So we did get the strong rally, didn't hold it through lunch, and then we gave it all back. This is so unusual nowadays. Frankly, it took me a while even to recognize it. But it is described in the book. This is a major league trend line, and we broke it. If we go under today's close by 1 cent, it confirms the break lower. However, Tom DeMark has sustainability criteria, and this break doesn't meet them. And although his other things haven't worked too well, his TD lines do. And according to his rules, we're going to retrace to this line at some time. And you can see that's over 3,800. Doesn't mean we have to retrace there tomorrow. Just means we have to retrace to this line at some time. We have a number of reasons to believe that retracement is going to come sooner rather than later. We have a volume spike on the E-mini contract. We have a bar completely under the lower Bollinger Band. We're down, I guess, 27.5 points in futures right now. Doesn't mean a thing. You get these bars completely under the lower Bollinger Band, volatility indices over the upper Bollinger Band. Those are signs of panic selling and signs of a low. And the biggest range of this drop was today's date, and often that marks the date of the low. This is where we are in the count. You can see the break. If this drop is equal to this drop, we have an Alt-C equal to Alt-A. You'll wind up, when you're all through, ending up in the middle 3500s. This is how I'm counting this one here. We have the A and the B. We have an ABC with good fibs right at the low. I think it's blue A, not the end of brown C. And the reason is There's no fibrillation shift to brown A, but there was actually, here's your 23.6, here's your ABC for red C. There's a good fibrillation shift to this blue A. So I think if this is the low, and it probably is, you're going to have a B and then a C that'll take us down into the middle 3500s. After we probably go over to 3800s first. Friday's pattern has the early high. We could gap down. Typically, it's a bearish day with a final hour low. Rallying strongly in the opening hours turns the tables. More strength usually follows even if the rest of the day drops. The employment reports due tomorrow can lead to large moves. I don't try to predict them. It's too unpredictable. Today's drop broke through major support, should confirm we've made a significant top. The bottom, should not be seen till the BP-SPX, bullish percentage of stocks in the S&P 500, drops at least to 30% and preferably 20% or lower. Rolling in the 50s now, you don't get major bottoms at that price. You have to drop to this if it's a major top. There's one possible target in the mid-3500s. That's the bottom. But paradoxically, today's bottom is a candidate for a short-term low. We have a volume spike, unsustainable break lower, biggest range day, and good fibrillation chips. Tomorrow has the early high. Hard to predict what's going to happen after the employment report, but even though futures are way down as I'm recording this, this is a very strong candidate for the end of this leg. We should have a recovery back over 3,800, maybe even finding resistance in the middle 3,800s, although I'd be happier if this didn't print. There's resistance if it does. And then we have a big drop with a likely target in the middle 3,500s. And if and when that happens, I think we're in for a huge rally coming after it. That's today's call.